Let's move right on then and talk about Reliance General Insurance. The profits have grown very smartly by 75%, and you've seen a strong focus on the company on expanding their non-motor business. Let's chat about that and more with Rakesh Jain. He's the CEO. And congratulations, Rakesh. It's been a strong set of numbers. What really led to this kind of strong profit and strong premium growth?
Thank you. Thank you for having me today. I think what we need to see is that the industry has grown quite well. The industry has grown about 30%. A lot of the credit for the growth goes to the Government of India for structurally including crop insurance under the ambit of insurance. That single-handedly gave about half of the growth for the industry as well as for us. The good part is the industry grew 30, but we were able to grow at about 40. So clearly we are capitalizing on incremental opportunities as well as building on the existing ones.
You know, FY17 PBT was at about 130 crores after provisions for IBNR reserves. Could you please explain the provisions for incurred but not reported reserves?
See, at the end of every year, we generally carry out a reserve adequacy test, which is like standard for every company. This is in context to motor third-party liability business. And invariably, they are actually based on the court awards which are granted. So we did a reserve review last year through an external panel actually, and that called for strengthening the reserves by about 170 odd crores, which we provided as a measure of one-time thing. And now we are fully provided, fully strengthened. But the good part is we were able to generate, through our growth, the surpluses to take care of this. And to my mind, as we move on, these will clearly be helping us to improve our profitability much faster.
Okay, so your market share also, that stands at about 7% in the private insurance space. Are you looking to improve that, and what kind of strategy have you put in place for this?
See, basically, market share is a function of how do you really get to source in this environment. And, about a couple of years back, we were predominantly an agency company through retail agents, where we were sourcing our most of the business. In the last year or so, we have diversified our sourcing mix towards banca. I'm happy to say that in the last 1 year under the open architecture, we were able to tie up with IndusInd Bank, Bank of India, Andhra Bank, Catholic Syrian Bank, and a few more. And what that has given us is more than 19,000 branch touch points across the country. To me, that will be a great, opportunity in terms of, growing our businesses at the hinterland. The second thing is we built our digital channel. I must also outline that we were the first company which went and tied up with Aadhaar, about 3 years back. We were the first again to tie up with Vahan for sourcing, the vehicle data. We were the first again to really integrate with the e-repository for e-KYC. So some of our digital initiatives have actually been built to ease the buying process as the claim process in a manner which gives us an incremental growth. To my mind, the way we look at our businesses, this is a business of need. It's a business of protection. Anybody who buys home, car, health, travel overseas, you set a shop, go down, you enter into a commercial contract for liability. Everything calls for a protection from our business. What needs to be done by an insurance company is basically to be present with the consumer, create that awareness in terms of what the products could do. And I think this works.
Yeah, I just want to go back to a comment that you were making earlier about improvement in your bottom line as well going forward. You've delivered a strong set of earnings. Can we assume that this is going to extrapolate into the coming quarters as well? What kind of return ratios can we expect?
See, I won't comment on the specifics, but I can clearly say that the future is far, stronger for us. I think what we did last year was exceptional. Clearly it's not going to repeat, and to that extent the incremental impact on the bottom line is going to be very strong.
So you've been seeking a partner in the general insurance business for quite some time. Any development on this front? When can we hear an announcement?
I think as and when it happens, we'll be happy to announce it to you, but it's clearly a matter with the shareholders, but there's nothing specific right now.
Okay, and any consolidation that you're seeing in the general insurance space, what really is the opportunity here?
See, the way I look at it is some of the businesses have run 15, 16 years, some of the businesses are new. Everybody wants to come to this market looking at the opportunity. Just on a simple data point, India, in spite of all the growth, like 30% I said for last year, we're still sitting at 0.8% penetration in terms of GDP. This is 1/3 the global average. It's an average. And you can say this is like 1/6, 1/7 of the developed countries. So clearly a lot of people would get excited to enter this sector because it's going to have a huge opportunity for next maybe 2, 3, 4 decades. But having said that, from a consumer standpoint, you need to create a value proposition, a product proposition, you need to have efficiencies of scale, and that is where a lot of companies would think of really working together or working in niches and boutiques. And my sense is you will see both the things in parallel.